Can we make new highs if tech doesn't resume its leadership role anywhere close to the degree that it had?
As long as tech is a market performer. If tech actually declines, that's going to be hard for the rest of the S&P 500 to compensate. But what we've seen so far, including days like Nvidia and Tesla recently, is that tech is actually holding its own, but other stocks are starting to show catalysts and signs of life.
Yeah. What about the broadening trade? I mean, look, you look at the Russell, your big call, of course. Week to date's down more than 1%. Really hasn't done much at all. I kept hearing, hey, you got to wait till the Fed cuts. Then you go into the Russell. I don't know. What do you think?
Well, Russell had a big week last week. It's some profit taking now, but I think that there's, this is what bottoms look like. I don't think bottoms are straight up. I know in 2021, energy was bottoming, and it was also very choppy, but eventually made not only new highs, but then basically had a blistering gain in 2020, in the year following. So I think that's a multi-year start for the Russell. It feels choppy, but we're still near all-time highs, and there's a big fundamental case to own small caps.
And you're still not necessarily sticking with the 50% up for small caps, but you still think they could have a huge move because they tend to move quickly.
That's right. I think what investors have to remember is small caps have been out of favor a long time, and they are known for having explosive rallies that are not abnormal. So last year was a 27% rally over really 20 trading days. I think we could see something very big between now and year end. I was hoping it would be after the Fed started the rate easing cycle, but maybe it really has to happen after Election Day. But are the fundamentals getting stronger for small caps? Absolutely, because interest rates are falling, merger activity likely picks up, and the median PE of a Russell 2000 stock is 10.7 times. I mean, that's not demanding, especially if we're trying to be sensitive to valuation.
All right, we'll leave it there.
Nvidia, the tech giant standing at the forefront of innovation and capturing global attention, has once again seized the spotlight with its fiscal 2025 third quarter results. Having unleashed yet another quarter of unprecedented growth, the company has left market watchers both exuberant and bemused. The buzz surrounding the earnings report, released on November 20th, was palpable, yet Nvidia didn't disappoint. Their financials showcased a phenomenal demand for its high-powered GPUs, particularly those fueling breakthroughs in artificial intelligence advancements. However, despite delivering stellar numbers, the stock market's initial reaction was surprisingly muted, leading to a dip in share prices during the subsequent sessions. This raises the question, are investors losing faith in this semiconductor titan, or is this merely a brief stumbling block before the stock resumes its upward trajectory? Stay with us as anticipation mounts and we delve into Nvidia's latest financial figures, explore ambitious growth strategies, and examine its highly anticipated introduction of the Blackwell AI chips. Stay tuned as the digital dust settles to reveal what these numbers might whisper about Nvidia's future trajectory. Welcome back, everyone, to Investocracy.
And Tom, I don't know if I need to ask you for like a specific price target on Nvidia at this point, but that was the market leadership until this summer when it broke down. What do we need from it at this point?
Well, I mean, Nvidia is still at the center of the entire transformation that's coming with AI, and Nvidia continues to be one of the leading companies. So, from a long-term investor perspective, I think anyone should look at Nvidia's congestion and consolidation as opportunities to add if they don't have exposure. And then I think for anyone else, it's just a time to be patient because, of course, stocks don't just go straight up.
We'll go. There are a couple stocks, however, moving higher. Nvidia is up about 3%. Yes, almost 3%. The company hosting a 3-day summit in Washington starting today. It's up 25% over the past month. That move has pushed its market cap back up above $3 trillion and passed Microsoft into second place behind just Apple.
Nvidia stands on the threshold of another monumental shift in technological innovation, stirring significant conversations with its latest quarterly earnings report. Veteran market analysts often muse, the stock market is funny. It's got a great sense of humor when you expect it least. True to form, Nvidia paints a picture of success that one might think seems too spectacular to be believed. Posting a record-breaking quarterly revenue of $35.1 billion, the figures comfortably surpassed both its guidance and Wall Street's estimations. Moreover, the earnings per share saw a robust increase to $0.81, compared to last year's $0.75. Nevertheless, rather than receiving roaring applause, the market responded with a dip in Nvidia's share price, delivering a less than enthusiastic response from investors. The familiar saying, "There's never just one cockroach in the kitchen," appears apt as concerns emerged following Nvidia's projection of a slowing year-over-year revenue increase for the upcoming quarter, anticipated at 70%, a reduction from its previously brisk pace. Furthermore, the projected gross margin of 73.5% reflected a decline compared to the prior year. Let us pause there. A closer examination of Nvidia's strategic framework unveils a more intricate narrative. The temporary dip in margins can be attributed to the escalation of production for Nvidia's eagerly anticipated Blackwell AI chips. Faster, faster, until the thrill of manufacturing overtakes the fear of margins. Perhaps echo the sentiments of those at the helm of Nvidia's operations as they aspire to meet the burgeoning demand manifesting on their horizon. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
We saw a big comeback for Nvidia. We saw really some continued flexing strength from the likes of Apple, which is now, I would say, firmly on top in the market cap race, such as it is. And then we've seen small caps struggle more than some might have hoped, though today is an exception. Which is more influential in this market?
They're both important, and they reflect different, investor views. I think you still always want to own the best companies in the most important themes. I mean, that's Nvidia and that's Apple. And they're going to really work over any cycle. But when the market begins to believe the Fed is going to move rates back towards neutral, and that's both cost of money, mortgages, auto loan rates, these are really big tailwinds for cyclical stocks and small caps in particular. So I think that's why I'd still want to make a very educated bet with high probability that small caps could do very well the next 12 months, and even between now and year end.
It's been a while since we've talked about your granny shots. Remind us what your thesis is behind some of these stocks that you like.
Yes. Well, Granny Shots is built on the idea that there are themes like secular drivers of an economy. And our original Granny Shot model looked at AI, cybersecurity, energy security, millennials as a generation. And then we want to own the best stocks in those themes. And that's really what was the genesis of the Granny Shots. And the names like Nvidia, Apple, Nvidia has been in that list since 2019. So I think it's always important for investors not to be trading the best names, but to really find the best companies and hold them for the cycle.
In its quest to solidify its future momentum, Nvidia is swiftly navigating time and challenges to scale production, ensuring an ample supply of Blackwell chips reaches the market as promised. The anticipated transition from the current Hopper architecture to Blackwell not only signals an imminent technological leap, but also promises to fortify Nvidia's financial health for the forthcoming years. Moreover, careful attention must be devoted to Nvidia's fiscal guidance, projecting an annual revenue nearing $123.5 billion, signifying a steadfast determination underlined by the company's audacious plans and a history of surpassing expectations. Analyst predictions for fiscal 2026 cast a hopeful light, with forecasts indicating a growth in earnings per share by 48% to $4.27. If precedent serves, Nvidia's trend of outpacing analyst expectations could very well persist, earning it the prestigious laurels of innovation-driven market leadership. With strategic foresight and adaptability, Nvidia's landscape becomes even more intriguing, intertwined with potential upheavals in tech markets internationally. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Started September off with one of the largest declines ever for September. And it's kind of coming on the heels of Nvidia reporting great numbers last week, but the stock being weak. So I think maybe the good place to start is just talking about Nvidia, and I think your take on how, what you thought of the quarter, and how it how it came in relative to your expectations and pick them up.
Yeah, look, Tom, I mean, I think that it was probably the most anticipated earnings that we've seen, I don't know, in a decade or ever, right? And in terms of watch parties and everything else for NVIDIA, just take out the noise in terms of numbers and in terms of what happens. Blackwell delays put to rest. Think about all the agita over the last few months on that. And that's similar to what we're seeing in our checks throughout Asia. Demand, we believe demand's outstripping supply 12, 15 to 1. And nothing we saw from numbers or metrics makes me think that that's dissipating. Now look, in terms of like whisper numbers for the quarter, 33 billion, 33.5, they got 32.5, slightly below whisper, stock gets hit. We look, 2 billion beats, we believe are probably likely here, right? But they're not, there's no reason that Jensen and the team are going to guide to anything near that, especially in a Blackwell type quarter. And I think you walk away, the demand thesis is accelerating. Yields are improving. And ultimately, I think it sets up for actually the next leg of the story. Now, look, I get where like sell-up happens, investors be like, oh, is this it? Is this over? It's second inning in a 9-inning game in terms of overall AI, because it goes back, and this is the most important, if there's anything anyone takes away from this call, it's for every dollar spent on an NVIDIA chip, the multiplier for the rest of tech is $8 to $10.
What strategic vision does NVIDIA's current maneuvers paint for the discerning investor within you? Simply put, NVIDIA isn't merely surviving, it's innovatively growing, constructing, and scaling, ensuring its potential remains robust on the investment horizon. The transient margin pressures currently faced are indeed the cost of gearing up for an even more dynamic future, where Blackwell chips might play the leading role in NVIDIA's symphony of growth. Trading closely with the NASDAQ 100's forward earnings multiple, NVIDIA continues to be an appealing prospect for those seeking stable, progressive investments in the tech sector. Consider this: NVIDIA is in it for the long haul, deeply committed to meeting and exceeding ambitious expectations as it navigates the constantly evolving tech landscape. Do NVIDIA's present market dynamics plant seeds of hope for greener investment pastures? Or is it merely a showcase of classic resilience, perhaps lacking the necessary vigor for maximally enhancing your portfolio? We invite you to consider and weigh in on whether this semiconductor stalwart might ignite the next major leap in your investment journey. With the economic landscape continually transforming, the potential for unprecedented opportunities remains vast and inviting. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.